Every once in a while, we get on the tickety-talkities and look at what's trending. And a recent thing is a funny one called Gen Z Writes Your Marketing Script. And for the fun of it, I decided to put that together with some information about DVC resale market and send it to our good old friend Derek DeBoer. And so, ladies and gentlemen, I present to you Gen Z Creates DVC Resale Market's Marketing.
Hi, I'm Derek from the DVC Show, and today I'm going to explain Disney Vacation Club. So buckle up, bestie. It's about to get delulu. Disney Vacation Club, or DVCs for the real ones, is like timeshare, but make it bougie. You buy points, you use points, and then you slay points. It's giving home resort advantage. It's giving 11-month booking window realness. It's giving, I'm reading because I can't read it, it's giving weightless anxiety. Some people rent and some people buy resale. As I'm going to scroll down because others, well, they're deep in add-on-itis. Thoughts and prayers. Here at the DVC resale market, we help you live your best main character energy without paying direct Disney prices. Why? Because retail is for clowns. No offense. Disney, we love you. We mean it. So if you're ready to level up your vacations, well, ditch those spreadsheets and finally understand use years. Hit up DVC resale market. Because Mickey didn't build this empire for you to stay at All-Star Sports. No cap, buy resale. Peace out.
Where did the pipe come from?
I don't know.
3.
I was thinking like a Ron Burgundy prop. And I was like, don't I have like a fake pipe from like a couple years ago? Let me hold it like this because everything I say sounds more important when I'm holding a fake plastic pipe.
Hey, everybody, and welcome to this week's episode of the DVC Show. I'm your host, Paul Krieger, joined as always by my lovely wife, Amy Krieger.
Hello.
We've got the Jeff Haslam with us, as always.
I have no idea what's happening. Derek giving straight riz right now.
I don't feel like I need to introduce Derek after that lovely intro. That was amazing.
When my 16-year-old sees this or hears this, his cringe level is going to be off the charts. I'm just warning you.
My cringe level is pretty off the charts, so.
I loved it.
It was, yeah. Oh, it's better than I ever could have imagined it to be. And the pipe just needs to come to every show from now on, I feel like. Well, welcome, ladies and gentlemen.
A pipe and a paddle for every single show for no reason.
That's a different kind of show. Welcome to the DVC Show, ladies and gentlemen. I don't know what to say from there other than it's going to be a fun week, and we're already in a fun mood. I would apologize to everyone that is saying yet again, where is our dear friend Big Fat Panda? Unfortunately, I can tell you that a couple minutes ago, I received a text message and a video from him in a dentist chair because he has a tooth issue and he does not want to come and be on the show looking like a hobo with one missing tooth. And so we respect that decision greatly. I had a whole script for him to read as well. So, we're just not going to put him through that tonight. So you're going to have a couple weeks where it's just the four of us. And this is what we resort to when we don't have a panda to join in the fun. So
no cap, Paul, no cap.
I have this marker. I could have colored in my teeth and been like him,
That's the next show, Jeff. Okay. We're going to need that for the next show for sure. Well, welcome to this week's episode of the DVC Show. As I mentioned previously, this week we're going to keep with the topic of kind of DVC and resale and direct and all of that, we have decided to take on the topic of how to pay for your Disney Vacation Club membership, because there are multiple different ways, whether you're buying direct or resale. And so we're going to kind of take you through the pros and cons of a list of different options. We're not necessarily going to be biased to one or the other. We're just going to kind of talk through all the different options of paying for your Disney Vacation Club, why we think maybe you should do it this way or you should not. We're going to lean heavily on my dearest wife here, who works in this department and really kind of touches this on a daily basis.
Yeah, in the beginning of the show, we couldn't agree on how we wanted to talk about this topic. But from my perspective, so full disclosure, obviously, I work for Monera Financial.
Oh, who's Monera Financial?
Which is one of our sponsors, companies.
Yes. We read the other ones as well, since I forgot to mention those.
Oh, that's where you were getting at. Sure. All of
I
our
can
content.
feel how annoyed Amy is through the video camera.
All of our content is brought to you by Key Holder Vacations, under the world of DVC, or it's kind of opposite of that.
Yeah.
Monera Financial, who can help finance that contract for you. They're out of order, so I'm going to mess it all up. DVC Resale Market, where you can buy and sell. And the DVC Rental Store, where you can try before you buy, rent out your own points. Don't forget about Unlocked Magic discounted tickets, unlockmagic.com/DVC fan. The end.
Been a great show, ladies and gentlemen. Have a good night.
We're all about to get fired.
I take full credit for driving us completely off the rails. So you're welcome.
I think this is a good topic, though. We do get the question all the time, and I agree with kind of the direction that we're taking the show. You could easily just kind of go to financing contracts here, but there are many different ways to pay for your Disney Vacation Club membership, and many people are very passionate about how they pay for it and how that's the only way it actually financially makes sense, really, at the end of the day. So before we kind of go down our list of, or Amy's list, as I will call it, of, the pros and cons and the different ways that you could pay for a Disney Vacation Club membership, I wanted to just quickly go around the room a little bit. Jeff, we'll start with you and tell us just a little bit about your journey into Disney Vacation Club and how you paid for your first contract or any of your contracts.
Yeah, so I did what I think a lot of people do. When I first bought, my resale was my first purchase, and I financed it through Monera Financial. It was the easiest process when it comes to somebody giving money from one person to another. Like, it was so seamless, so simple. The paperwork, everything was just so lined up. Like, it was such a sense of relief that I did it again shortly, even before that one closed. And then with my direct contract that I bought a few months later, I financed that through Disney. So I've kind of done both of those options.
Derek, you bought DVC before becoming a guide, if I'm correct. And
Correct. Yeah. We bought it back in like the late 90s. And it's a funny story because I always tell people that we bought DVC and we didn't even have a house yet. So we were on vacation and we knew that we were going to come to Disney World. We had just gotten married. We're like, God, we love Disney. This is great. We took the tour. We bought it. So for us, the only option, because we were going to spend the money anyway, coming back year after year after year, was if we financed it. So yeah, we are one of those people that we did finance it through Disney. So I know by the time, I think it was like a 10-year loan, I can't remember at the time. So I'm sure, when all is said and done, I could have pounded the numbers out and realized I paid a lot more than the $70 a point I paid for my boardwalk at that time, by the time I paid off the whole entire loan. But for us, there was no other way of us getting started. So for us, financing through Disney was the easiest thing for us to do. So yeah, we financed it through Mickey Mouse. I can't remember what the interest rate was, though, at the time. And I think maybe we paid it off early, maybe a year early or 2 years early. But yeah, we did it. We were one of those people that financed a timeshare. That was us.
We've been there too. We financed a direct contract, we financed a resale contract, and we have paid cash for at least one contract.
Two, yeah.
Two contracts, yeah. So we've been there and kind of done all of those a little bit. But getting into the nitty gritty of paying for a contract, I think the first place that we have to start is understanding what kind of cash you should expect to bring to the table and the different elements of where that money goes, what you are paying for. Amy, can you kind of take us through that? Because I hear you do it on a daily basis on the phone with borrowers, not understanding kind of the different layers of where the money goes and how and what you're paying for when you're actually buying that contract for the first time.
Yeah. So regardless if you are paying cash, regardless if you are financing in some capacity, there are basically three main things that you pay for when you purchase a DVC contract. And that is the same for resale versus direct, although direct will do the processes a little bit differently. But you need to be prepared for three things. The first thing is obviously going to be the purchase price. That is the amount of points you're getting times the cost per point. So that's the purchase price. For anyone that is financing through a mortgage-based finance, that's what Monera provides. That's what Disney themselves provide. Instead of paying for the entire purchase price, that item is going to be replaced with a down payment. So what a down payment is it is the part of the purchase price that a loan does not cover. So for example, if your down payment is 10%, either through Disney Direct or if you're financing with Monera or whatever, you are paying for 10% of that purchase price, and your lender is paying for 90% of that purchase price. So that is what a down payment is. If you're paying cash, you're paying 100% of the purchase price. But if you're doing financing, you're going to be paying a percentage of it in the form of a down payment. The second main thing that you need to be on the lookout for, this is a real estate purchase. And a lot of people forget that when they first get into the numbers. And just like when you buy a home or any other piece of property, there are real estate based closing costs associated with that. Closing costs are things like title company fees, because there's a title company involved that handles the closing. Government taxes, because there's real estate taxes. There's county recording fees. There's things like title insurance for, to protect your investment. So those closing costs are the second piece of the puzzle. And then the third piece of that puzzle are Disney's annual dues. And the annual dues, how much you pay when you purchase, is going to depend on whether you're buying direct, whether you're buying resale. It's going to depend on how many points you're getting. It's been a while since we've gone the direct route. I think they charge a prorated annual dues and they bill you for them later, and sometimes they forget to tell you that, and then your bill shows up. Or
if Panda were here tonight, he would be telling you all about that, because that happened to him the first year. It happened
to us as well. They didn't tell us, and we didn't know we had this bill sitting here, because we would have paid it as part of the sale. When you buy resale, it's a little more cut and dry. Right on that listing, it tells you exactly what the annual dues are. In most cases, depending on the time of year, it's the middle of 2025. So whatever you're buying resale, you're going to be paying for the annual dues for 2025 for how many points you are getting for that use year. So 100-point contract, you're getting all 100 points for 2025 right now. You're most likely going to be paying the annual dues for 100 points. If you're only getting 50 points and the seller used the other half, then you're paying a prorated amount of dues at closing on 50 of those points. So those three things, either purchase price or down payment, depending on if you're financing or not, closing costs, and annual dues. Those are the three main costs of purchasing a DVC. There's one other entity that people get confused with, and that is called the deposit, or often referred to as an escrow deposit. And that is an amount of money that you give upfront. That deposit basically shows that you're serious about buying. It secures the contract for you. It gives the seller the good faith to take that contract off of the market, and it gets held in escrow until closing. A lot of people get the deposit and the down payment confused, but they're two different things. The deposit comes back to you at closing as a credit, and it goes towards the total amount that you owe. So basically, at the end of the process, when you're ready to close, your title company adds up, what is your down payment or purchase price? What is your annual dues? And what are the closing costs? They add those three things up and they subtract that escrow deposit that you already paid, and then you pay the rest. And that's how you close. And I would compare an escrow deposit to, if you're buying a house, usually they call it earnest money when you're purchasing a home. Same concept. So, you put it down, you get it back. However, if you cancel, and this is the same for resale, Disney, you have a 10-day period to cancel, and then you're locked in. You've bought that contract. For resale, Derek, do you know what is the time frame?
It's a 10-day.
It's 10 days also. Okay.
Yeah, that's Florida state law. So it gives you a 10-day rescission period, which I think is important, is that because some people will come on or they'll call us and ask questions and be like, so if I buy this and change my mind, like I can do that, right? And I'm always quick to say, you know what, but don't do it. Like if you're not 100%, planning on moving forward, don't just buy something with the intent, like, this is a really cool contract, I think I want to buy it. Just, you guys have to know that when you purchase that listing, and Amy touched on it, it's so important. I mean, it's a legal contract. You're buying, say in Florida, you're buying deeded real estate in the state of Florida. So I always kind of laugh that it's fun to go on the DVC resale market site, right? Because you move your cursor around and there's pixie dust, and I can see some of my favorite resorts. And it's fun. When you buy it, you get an offer accepted. It's then reality hits when a contract is emailed to you, right? With all the approved Disney language and what exactly you're purchasing and clauses and sections in there. So move forward when you're ready. Is there an out in case something happens? Absolutely there is, because you're buying deeded real estate. Say in the case of a Walt Disney World resort, you're buying it in Florida. So should 7 days in, all of a sudden something happen to your house or your car, and you call me and say, Derek, I'm so sorry, we can't move forward. That's fine. Your escrow is fully refundable. What people need to realize, which is very, very true, and it happens from time to time, not often, but when you're purchasing that, and say 2 months down the road, I've gotten emails from people or from the title company where the buyer goes, yeah, I don't think I want to do it anymore. And you're like, well, no, like you can't just quote unquote change your mind at closing because you don't feel like moving forward. That's why we have the legal things written into the contract to protect not only the buyer, but to also protect the seller. So again, take your time, make sure you're ready to move forward on it. And once you pass that time, know that, you can't change your mind, at closing and say, well, I just decided not. Because when you agreed to purchase that listing was pulled off the market, right? It might be off the market for 2 months. That seller is firmly anticipating on closing next week. So you can't just reach out and say, I changed my mind. If you do change your mind, that's why the contract says you will lose your escrow. So your escrow is gone. And that's why the escrow is so important, which one thing kind of to touch on too that Amy mentioned is people will reach out to us and say, well, I'm a cash buyer. Can I just pay for the whole thing right now? And it's always no. So know that when you do get an offer accepted with me or with the DVC resale market, you have, like Amy said, it's always going to be a 10% down payment of that purchase price, whatever that is. Let's say it's 100 points at $100 a point. So you could put down $1,000, or the title company will allow a max of $2,000, which is why some people would say, well, why would I put down more than that? Well, like Amy said, the money you put down is going to come back to you. But most importantly, a lot of people have rewards cards. So they want to know, what's the max that I can put on my Disney Visa card so I could get the Mickey dollars back? So that's always escrow, which is due when you get an offer accepted. You have a max of $2,000 or 10%, and that can go on a credit card. But it's important to note, because some people will go into closing thinking, well, I'm just going to put the whole thing on my Amex, or I'm going to put the whole thing on my Disney Visa. All the things you cannot do it with a credit card, right? It's going to have to be a certified check or a wire transfer at closing. So get it accepted, put $2,000 on that Disney Visa, then anything else is not due until closing. That's it.
So let's go into that part of kind of a way to pay for contracts, because Derek, credit cards in the way that in the resale world work, that is definitely true. But we have heard of people that have paid for entire contracts, direct contracts with credit cards. And Amy, you put together a list of kind of the pros and cons of what paying for a DVC contract that way would maybe look like. Yeah.
And before I talk about the pros and cons, I do want to kind of differentiate why DVC themselves can accept a credit card for an entire purchase price versus resale, why title companies don't do that. And I'm so glad that Derek talked about the deposit and why after that 10-day rescission period, you forfeit your deposit if you cancel the contract. And it's always important to remember, when you buy resale, there are two sides, right? There's a buyer and there's a seller. The seller is not a company. The seller is not a corporation. The seller is a member. The seller is a person, just like you, that's anticipating, getting their contract sold, getting their funds from the contract.
They could be in a financial hardship for some reason and need that money. Like, that's why they're selling their actual contract.
And that's why if you decide to cancel at the last minute and that seller has had that listing off of the market for you for months, that's why you lose your deposit, because there's another person on the other end of that deal.
Yeah.
So with that said, Disney is the person,
the corporation,
on the other end of the table. They are the corporation, and they hold that power that, credit cards are great for those of us that use them correctly and properly, and those of us that get miles and points, and they're a great thing for that. But title companies at closing have to have cash on hand to give the seller, because credit cards are too disputable. A seller can pay, or a buyer can pay with a credit card, and then they can go dispute it, and then we have a problem with getting money to the seller. Whereas Disney, if you go and mess with Disney, well, they just don't give you your points. You know what I mean? They have that power. So that's why when you purchase direct and you're paying cash, quote unquote cash, you can use a credit card for the full amount. Disney is able to allow that because they have the power to withhold your points in the event of like a credit card dispute or, a credit card closure, or any of those issues that could arise. So with that said, the benefits of paying with a credit card, if you are buying a direct contract, are that obviously you can get miles, you can get points, you can get Disney Mickey dollars, as Derek called it. If you use your Disney Chase Visa, They offer 6 months of no interest when you use that for a full DVC purchase. So if you are someone that can have the funds within 6 months, that could be a benefit for you. You've basically paid cash, right? Same as cash because you didn't pay any interest. But there are obviously drawbacks to using a credit card if you don't pay within, the no interest window, which is very short. Your interest is going to be a lot higher than any loan out there. I don't even know what credit card interest rates are in the 20s. Right?
I never look at them because I never want that situation. Like I never,
Yeah.
I know I never want to be in a situation where I'm using
credit
that
cards.
percentage.
Yeah, we use credit cards for everything pretty
Correct.
much that you can. But we pay them like obsessively. I don't even let like a $5 charge sit on my credit card, which is I should wait and just do it once a month, but it drives me crazy.
But that's a large part of that is the fact that we both were in credit card debt coming out of college.
That is true.
And both of us basically kind of had what we would call like a consolidated debt loan out of college, in which mine was the result of having a girlfriend at the time that was not Amy, and I bought all kinds of things for her, and I put things on credit cards all the time, and then I had this massive bill. It was like my first credit card experience, so like I didn't know how they worked. I just thought it was funny money and free money. Not the case. And so one day after I dumped that girlfriend, my mom was like, we should do something about this. And so we ended up like putting all of these credit cards together into a loan, and then that loan had a lower interest rate than all of the credit cards together. Wow, I went on a tangent there. No one really needed to know that story. I do have a question for you, though, before we continue on this cons of credit cards. Can you correct me if I'm wrong? When you would pay for a contract on a credit card, does Disney deem that as like a travel? Is it a travel transaction? I believe that's true. It is graded as travel on the card.
Yeah. So every credit card company labels their, travel expenditures differently. So it is going to depend specifically on your credit card. But for most people, it'll be labeled as travel. And I know that because when we had our direct DVC loans and I would make extra payments, the system, so your monthly payments had to be pulled from a checking or savings account. But if you made principal only payments, Disney did at least at the time. I haven't had a Disney loan for so long, so correct me if that's changed, guys. But you could use a credit card for your principal only payments, and it always came up as travel on my Capital One Venture card. So I was able to use the travel eraser when I had miles and use it on that.
Or if you had like a travel card that gave you more miles for travel related expenditures, it would be graded as such. So
yeah, does anyone else have any thoughts on using a credit card? And that's just direct. When you buy resale, like Derek had said, you can put the escrow on a credit card.
I love having a third party to these transactions because you realize how riveting the conversation we are having is. Jeff is here still, in case anyone was wondering, though. Jeff,
I'm about to go get my Switch and play Mario Kart.
Yeah, play the guitar for us or something. Liven up the show. But I do like having a third party that is not necessarily related to the conversation that we're having. Has there been anything that you've heard so far, or any questions that you have that have come up in the conversation?
Not so far. Actually, I think you guys have covered it really well, and I actually learned a couple of things as well. When we get down the road, I actually do
about my ex-girlfriend or about.
I have a lot of questions about that, but we'll take that off the air for sure.
I do too. I'd like to know what.
Oh God!
What kind of gifts did you buy this young lady, Paul?
Oh no! Yeah.
And how come we're not getting any gifts? Derek, do you have any gifts? I don't have any gifts.
What's next on the list, Amy Krieger? Save me.
Okay, well, I do. I'm going to actually have some questions for Jeff on this one because he has expertise into the real estate world. One big financing big financing option that a lot of people use are HELOCs, home equity loans. Jeff, do you know, does a home equity loan require an appraisal on your home?
That is a great question, and that's going to be dependent on a couple of factors. It's going to be dependent on your lender. First of all, every lender has their own underwriting guidelines. Okay, anybody that's in the mortgage market, typically they have to obey Fannie Mae guidelines as well, because they're the ones that eventually going to take that loan and sell it on the open market. The biggest key factor is your loan to value ratio. If you have enough equity based on their metrics, maybe not. I will say in the current climate right now with interest rates where they're at and, kind of a lot of uncertainty in the mortgage market, I can't speak to nationwide, but I can speak to Florida and Utah where I have a lot of expertise. Mm-hmm. Florida right now, Central Florida, sellers are outweighing buyers by a pretty substantial amount right now. A lot of new construction kind of tugging on those upper limits of value. We're seeing some decreases in a lot of areas, not significant, but definitely some softening. And so as lenders look at that, they're going to want to make sure, and it's their decision only. You have no input in this. It's their asset. The home that they're lending on is their asset. So they want to make sure that asset and that value is secure. Yeah. If you bought your house, I would say in the last 5 years, you're probably going to need another appraisal because you probably don't have enough equity unless you came to the table with a lot of cash. If you're in an FHA loan, for example, or some of those other, non-conventional loans, we'll say. So I would venture a guess to say probably 80 to 90% of homes are going to require an appraisal right now.
Yeah. That was good information. And Paul was also Googling, and everything you said was accurate. not that we didn't believe you.
You're just like Google, Jeff. You are my
wow.
Google. I'll send you a present that I buy on a credit card.
So HELOC loans are brought up a lot. And the reason for that is because the interest rate is typically going to be lower. And I can see the value in doing that. I think there's also a lot of cons to HELOC loans. And, Jeff basically said it. That home is now that lender's asset. So you're not, when you do a mortgage-based financing through like Disney, through Monera, the DVC contract, that is the asset. That is the collateral. You have no risk of losing anything else if you end up ending up in a situation where you can't make payments on that contract. You can lose the contract, but that's it. With a HELOC, you can lose your house. So I think that is just something you need to strongly consider when looking at home equity loans. There's interest savings. There's risk with the asset. With that, it is a much more difficult process because you are taking out a loan that might require an appraisal of your home, that probably requires some sort of credit check, income verification, employment verification, those sorts of things. And then the same is to be said with like a personal loan. Personal loans can be a good option for many because they do have typically lower interest, but the process is a little harder. When we originally were looking at financing, I had looked at, is it called Lightstream? Mm-hmm. They're a big one that does timeshares. But you don't know what your interest rate is going to be until you go through the full process. And they pull your credit and they look at your bank accounts and they look at your pay stubs and they want the full financial picture before they can give you what your rate's going to be. So that was That was one reason I didn't choose that. But actually the biggest reason I didn't choose them was because the terms were very short, which made the monthly payments very high.
Yeah, there's many different options out there. I know, actually, when I bought your engagement ring, I used a company called Lending Club.
I remember
which
Lending Club.
I
Yeah.
think Lending Club is still around in some capacity, but it's actually a two-sided company where you could either be an investor or you could be someone that is trying to get money, and you then put together your package or portfolio of why you need this money. So in my case, it was to buy an engagement ring for Amy when I needed the cash to do so. And you have investors that then look at your credit report, your risk assessment, and choose how much money or what percentage of money they want to put in there. I would not necessarily recommend that either for Disney Vacation Club, because the terms of that do aggressively get worse, similar to like a credit card, in which it did give me an interest rate savings for the term of the loan. But if for any reason I missed a payment, or for any reason I would need to extend the term, then the interest rate significantly got worse. I personally have always viewed a HELOC as like, if I need something for my house. So if I need a new roof, at least I'm getting a HELOC and putting the value back into my house, so that hopefully that value does not decrease and I still do have that value by putting the money back into it. I have not heard that thrown around for a while, and I did want to go to Derek on it. Derek, do you hear of people using HELOCs as much as we used to, or is that kind of gone by the wayside?
No. Honestly, I can't even remember the last time anyone even said that. Just because with our partner Monera, and I'm not going to sound like a commercial here, but when people ask and say, so I could pay cash for it, or I'm not quite sure, do you guys have a recommended financing partner that you guys could work with? I tell them how great Monera is to work with. Amy can attest, the process is incredibly simple. It's really easy. It's really quick too. So that's what people love to know, is because if they see that listing and they know that maybe it's a popular one, they don't want someone else to come in and buy it, but we get asked, do I have to get approved before I buy this? And if they say that they're going to work with Monera, I go, don't wait, get the listing. Then once you have that finalized price, then you could go to Monera, you can apply. And Amy, correct me if I'm wrong. I mean, you guys will sometimes do it in like less than 24 hours, correct?
Yeah. Sometimes it's like 5 minutes or less.
Yeah.
It depends on whether or not Amy stepped away for a cracker or,
I do
a
take
drink.
cracker breaks.
She does. She likes these new wheat thins that are, what are they? Tomato basil?
Sun-dried tomato and basil. They're the best wheat thins
They
ever.
are pretty good.
So that makes it really nice for people looking.
Jeff
at
has a cracker question.
Cracker question. Just because if you're worried, like, oh, I don't want to miss this contract, but I don't know, do I need to go work with a company like Paul said? Are they going to ask for a hair sample and a blood type and all this other stuff before I can get approved? That's what's great about Monera. You just go to monerafinancial.com. They've got an online tool that I send people to all the time. So I plug in the numbers. It'll show you, depending on what you're looking for, how much do you need to bring to closing. So that way you get to pick the terms you want, but you don't have to worry about, am I going to get approved? Because it's up to you, and don't miss that listing. So you can always get it, say you're, not even sure about financing, but even in the comments, just say, hey, Derek, I'm thinking about financing with Monera. That's totally fine. Just get the offer accepted first, just because then you know what hard numbers you're actually going to be working with. Because real quick on just what Amy had talked about too, that's what's great when people look at these listings is, again, if you're not financing, there's 3 costs, right? There's your one-time purchase price for those points. That's it, your one-time price. Then you pay closing costs, which is based on that one-time purchase price. Then, as Amy mentioned, you have the annual dues on it too. People get confused when it comes to the dues and the use year. So a lot of times people go, well, I want the seller to pay my dues because it's a December use year, and I've already missed half of them, and it's got the point. So I want the seller to pay my dues. A buyer will always pay dues for those points that are available if those points are fully bankable. So when I explain to people and you say, yeah, listen, I know it's got a February use year, right? And it's got 100 points, but those 2025 points, Guys, they're fully bankable. A lot of people will think, well, they're February 2025 points, so I've got to use them by like January 31st of, 2026. You say, guys, they're fully bankable. So if you want to bank those points into February of 2026, you then have all the way till January 31st of 2027 to use those 2025 points. So that's why, depending on the number of points, it'll always say, and it states clearly, like Amy said, if it's 100 points, you're paying dues on 100. If it's 25, you're going to pay prorated dues on the 25 while those points are fully bankable. So that's it. If you're paying cash for it, there's no hidden fees. I always tell people when you go to Monera, they're going to have, again, lender fees and whatnot, but use that tool, monerafinancial.com. It'll walk you through all of it. So you know exactly how much I have to put down at closing, which is helpful.
Yeah. And to go off, I'll go ahead, Jeff. Sorry.
No, you're fine. I just wanted to cue in here and then I can take a nap while you guys probably talk about the rest. But no, I'm just kidding.
Are they sun-dried tomato chips?
Yeah.
They are.
With how easy, again, I don't want to sound like a commercial either because I don't work for anybody. I work for myself. But when it comes to the Monera thing, I can't stress how easy it is. Back to our HELOC conversation, you got to go and you got to get pre-qualified and then there's, closing costs there too. And then you got to have the appraisal. And I personally, as an appraiser, I'm a minimum of a week out right now. So there's time that all you got to do with Monera is like click this button and it's done. There's nothing saying that that's your end all. You can go and get a HELOC later. You can, sell your car. You can do whatever you want to pay off that loan. But the other thing about HELOCs too is the reason people aren't doing them right now is most people probably bought when interest rates were 2.75, 3.5%. Mm-hmm. Interest rates are now hovering around between 6 and 7. So your HELOC's going to be a couple of points above that. It doesn't make a lot of financial sense to add that kind of stress onto your mortgage when interest rates have jumped so much for a $30,000 or $40,000 purchase. So I would caution people against that route. Again, do what's best for you. You know your financial situation better than anybody, but there's a lot of better options. Even though, Disney and Monera's financing is probably higher than your HELOC percentage.
Yeah.
You don't want that tied to your house, man. If you have to get out of that in a hurry or something happens, you get sick, any manner of things that can happen, that the reasons that Derek sees why people sell these contracts, you don't want it tied to your house. You really don't.
It's the same thing we've heard people doing like a cash out refinance or stuff like that over the years. And it's like, why would you want to increase, your monthly payment on your home? You're not just increasing based off of the $30,000 that you pulled out to buy Disney Vacation Club. You're increasing based off of the entire $300,000, $400,000, $500,000, $600,000 that you're borrowing against your whole home. So there's big negatives to that whole thing.
Well, and what happens too if down the road you decide you want to move, like we do, and like you guys just did? If you've added on additional mortgage to that, you have to make sure and be able to sell for that, or you're going to have to pay money at the end of the transaction before you're allowed to move. Most people want to use the sale of their house to help finance the purchase of their new house. They want to upgrade. They want to do all these. If you're adding on to your HELOC for this kind of a purchase, and then you have to sell or want to sell in 2 years, you might be underwater.
Mm-hmm. I know we're going to kind of wrap things up with financing with Monera or in that format or with Disney Vacation Club here near the end, and also talk a little bit about cash. Before we segue into this, talk a little bit about what affects all of these and the pros and cons of it, which is pulling a credit score. Because I know I hear you have that conversation on a daily basis with people that are lending with Monera, and it is a consideration whether or not you are lending in that manner, whether or not you're getting a new credit card that you want to put the Disney Vacation Club on, or whether or not you're getting a HELOC. All of those are going to require a hard credit hit, which is something to consider in this process also as to whether or not it's worthwhile to go through.
Yeah. So like I said before, personal loans, HELOCs, those are all going to require a hard credit inquiry. And typically it's for everybody that's going to be taking out the loan. A hard credit inquiry goes on your credit report. In most cases, I believe they stay on for 2 years. Now, I pull credit every day and I see credit reports all day long. An actual credit report, a mortgage credit report, will show where inquiries have reduced a credit score. So inquiries can add up. If lenders see that you are applying too often for credit, that gets counted against you and that reduces your score. So that's something to think about because most loans will require a hard credit inquiry. Disney does as well. They require a hard credit inquiry for their mortgage, which is all they have are mortgages. Monera is a mortgage as well. We do have credit check based loans. They do have, tend to have lower interest rates than the no credit checks or lower down payments. But we also offer no credit check financing. And basically what that means is we don't pull your credit at all. We use the value of the contract, the value of that asset to be able to lend to you without needing to pull your credit score. The other thing about Monera is that they don't, and this is the same for Disney as well, they don't report the actual debt, the actual loan itself to credit bureaus. So when you go later to have your, to buy a house, to buy a car, and your lender pulls that credit report, starts looking at your debt to income ratio, they're not going to see your Disney loan. They're not going to see your Monera loan because of, timeshare requirements. We're not required to report that. So that is not reported. Now, with that little disclaimer, some lenders will look at repeated payments that you've made in a checking account. They may look into what those are. So just be aware of that. But yeah, we do offer no credit check options. And I have people that have excellent credit, but they'll end up choosing a no credit check because they want to keep the inquiries off their credit report. They have something bigger, down the line, a house, a big car, whatever, that they plan on financing. And so they choose our no credit check route. We don't require income verification. We don't require employment verification. We don't get into your bank account and look at all those numbers. It's just a very simple, easy process. Now, that's not to say that it's without its cons. Obviously, as Jeff said, the interest rate is a little higher. It is a mortgage, but it is a mortgage for a luxury purchase. So it's going to be a little different than the amount of interest that you're going to find for a home mortgage because this is a luxury purchase. But to not sound like a commercial for Monera, you guys know by now, I work for Monera. I love my job. There are other benefits to mortgage-based financing, whether you are doing it through Monera, through Disney Direct. It is a mortgage loan. Therefore, the interest that you pay each year is eligible for a tax deduction. I do have to tell you to check with your tax professional to see how that might benefit you. I can't give you tax advice, but disclaimer, but you will get a 1098 each year, just like you do for a home mortgage that shows the interest that you paid on your Disney or your Monera timeshare loan, since it's a mortgage, real estate based mortgage. And then the other benefit is that there's no prepayment penalties. And this is something that Paul and I did want to drive home. We've talked about this before. You can save interest by paying a loan off early. And since there's no penalties, Paul and I paid our Tesla off early. And do you remember we got hit with a prepayment penalty? And we didn't realize it had one? That stung, to get charged for paying something off early. But we have no prepayment penalties. Disney's mortgage has no prepayment penalties. Anytime you've got extra cash coming in, you get a tax refund, you get a bonus at your job, you get whatever. If you can go and put that on your loan, your Monera loan or your Disney loan, every time you make extra principal payments, you are knocking several months at a time off of that mortgage. And the result is that, one, you're reducing the term faster. Two, you're reducing the principal. Mortgage loans are simple interest loans, and the interest you pay is calculated per diem, which means per day, off of what the actual principal is. So if you're reducing that principal, the next day, it's calculating that interest off the new principal. It's going to be a lot lower as you continue to reduce that. And that's the same for your home mortgage too. Paul and I did this. We doubled our first mortgage payment on this house.
We've done it for like our past 2 or 3 houses just because of this benefit.
Because you can knock a couple of years off of your mortgage right off the bat by hitting an extra payment early because of the way the interest flows down.
And you can arguably say that if you can't do it with the first payment, think of it early in the term. The earlier in the term, to your point, that that you can make those extra payments, the more you're chipping away early at that principal amount, which reduces the overall total interest that you're going to pay over the life of the loan.
Yeah, absolutely. And if you're ever, you're the type of person, you have to look and you want to see the actual numbers, there are so many resources online that can help you with that. First, you can look up any basic loan amortization schedule or tool to see like how much of my monthly payment is going to interest each month, how much is going to principal. When you start paying any mortgage, a home mortgage, a timeshare mortgage, you're always going to start off with more going towards the interest than the principal. And as you continue to pay down that principal balance, that's going to start to shift. And you're going to start to see more going towards the principal later on. So the sooner you can get that balance down, the faster that more of your money is going towards paying down the principal balance. There's another tool you can just Google. There's multiple of them, and it's just called like early mortgage payoff calculator. And that can show you how much you can save on interest just by making, let's say it's like, I'm going to make an extra $100 a month, or I'm going to make an extra, $500 this many times a year. And it'll show you over the life of the loan, you're going to save this much in interest. And those numbers are accurate. Those tools are accurate. So use them, to help you build a plan for how you're going to pay it off. And that's, at the end of the day, there are going to be people that comment on this video and they're going to say, don't finance. You cannot afford if you have to finance. We don't believe that. We financed 4 of our 6 contracts. They are now all paid off. And now we have 6 DVC contracts, and we're happy. And we had all those years to enjoy our Disney Vacation Club. Whereas if we had to wait and save up, first of all, the prices would have increased. And second of all, we would have lost all those years of membership and memories and enjoying the benefits. If you can comfortably afford monthly payments, then I don't see any problem with financing.
Well, and we're not sitting here arguing the fact that cash is not the best way to go. And I think that's where people always come for us in the comments, or always come for us when we bring up this topic, which is that if you have the expendable cash and you can pay for cash, 100%, that is your best value. Right. That is the best way to pay for Disney Vacation Club. Hands down, we'll take a pause there to say that. It is the best way. But the fact of the matter is, not everyone is in that position, and not everyone always plans ahead and puts that money away and says, oh, I'm going to spend it on a luxury purchase. Even in the times that we have done it, I've asked myself, am I going to regret that I pulled this cash out for DVC? What's going to potentially happen to a car or a water heater or something where I'm going to wish that I had this cash a little bit later? And when you factor it in that way, the interest rate is lower when you think about everything and factor everything in, that I chose to finance Disney Vacation Club versus, put that water heater on a credit card, not be able to pay it off, be paying 27% interest or whatever that might be through that process. So again, come for us all you want in the comments, but we're not arguing that paying cash is not the best way to do this. It's just, I go back to, we recently did a member spotlight show with Carrie Crevel, and Carrie said that, this decision became personal and emotional very quickly for her and her family. And that's the question that I think a lot of people have to ask, is how long do you wait to not have these memories and not have the experience of coming back to Disney year after year? So if financing in some capacity, whether it's on a credit card or a HELOC or with a company like Monera, if that makes it more accessible, that's the answer to the question.
Yeah. And obviously, we want you to make good choices. We want you to buy what you can afford, monthly payments that you are comfortable with, and still have the funds for the things that you need and things like that. But at the end of the day, the ability to finance is what gave sorry, I'm not choking up, I'm just like
you're choking up for the camera. Just play into it. Play it up.
It's what gave these two, West Virginians, I was a teacher, he was, he worked in an office, he started
poked eyeballs all day.
It's what gave us the ability to become part of this community, to become members, to have something to look forward to. You know what I mean?
And for us, live the life that we're living now, because if we had not done that, we would not be sitting in these chairs. We would not be working the jobs that we have. That's our personal story.
I can't imagine not having a vacation to look forward to in this day and age, in this world with all the sad things that happen, just having that escape and knowing I have these DVC points, we can go for a weekend here, we can go to Disneyland, we can go to Vero Beach. We have these things to look forward to, and we wouldn't have started that. We wouldn't have had 4 out of 6 of them. We pay cash eventually down the road when we were able to, but for the first several years, we had to finance. And I couldn't imagine, especially when I was a teacher, the last 3 years of my teaching career were 2 years of statewide teacher strikes, followed by 2 years of the pandemic. So actually the last 4 years. I couldn't imagine not having Disney to look forward to.
Yeah, for sure.
Yeah. Well, at the end of the day, it's, if you've got cash to pay for it, good for you. If you need to finance, it's just another tool to remove some of those barriers to entry. Not everybody's financial situation is the same, and not every online financial guru can say without a doubt that their way is the right way. You know what I mean? It's an opinion. It's a approach to financing. There's many different approaches, but at the end of the day, you'd have to do what's best for you and your family. these are just tools to help remove some of those barriers to entry. And I'm with Paul and Amy. I would have never been able to do it. I'm not very good at saving money. I'm really good at spending money. I'm not very good at saving it. And so having a financing option made that barrier entry easy. And now I can say that I paid them off and we can move on and buy the next one and so on and so forth. But there's no one right way. You have to do what's best for you.
No. And that's why I'm so glad that Amy and Jeff and everybody brought it up, because it's true. This is not an infomercial for Monera. That's not what this is. This is not about, because again, people will come at us in the comments. They will say, if you can't afford Disney Vacation Club, then don't buy it. But like everyone here has said, I know that if we didn't finance our Disney Vacation Club purchase over 20 years ago, guess what? Yes, we could have sat there and said, honey, let's just wait until we can pay for it in cash. Guess what we would have done every single year? Pay cash to go stay at Port Orleans, Dixie Landings once again. And we would have done it the next year and the next year. And the hotel rates would have kept going up and up and up. And the price to join DVC would have gone up and up and up. We weren't going to put that money away and save it up for Disney Vacation Club. But because we had a financing option and we looked at whatever the monthly payments were at that time, again, we were newly married. We said, you know what? We can do this. Because honestly, God, we're going to come back here and we're going to come back here again and again. And if we didn't finance it, my life wouldn't have changed, meaning it got me into, being a Disney Vacation Club member, which turned into me being a Disney Vacation Club guide, which in those early formative years when my, oldest son was born, was taking him and experiencing places like Vero Beach for the very first time, which they've now grown up with over 20 years of their life. And like I said, it helped me become a Disney Vacation Club guide. So, and what I still get to do now. So I know it sounds, silly and it sounds like, oh, it's just easier to pay cash. Yeah. And if you can, do it. But like Amy covered and everyone covered, there's so many different options because as I say all the time, at the end of the day, people will say, yeah, but you know what? You could take that Disney Vacation Club. You could take that 20 grand purchase. You could put it into a 642 loan on the upside with the swing over, and you'll compound the interest and have $8 million. But I would tell these people, I go, yeah, but you're not doing that. Like, you're going to Disney every single year. You're giving Mickey Mouse your money every year. So at least with this, get started with it. Like Amy said, you've got options to pay it off early, but get started, and if financing it, again, with Monera, with no penalty to pay it off whatsoever, make those extra payments is going to be the difference in you saying, I know I should join, but I'm going to wait to pay cash, but I'm going to go year after year after year. Just do it. Just do it.
Mickey didn't build an empire for you to stay at the All-Stars.
Oh no. We've come full circle now. Well, I can't believe we've talked for over an hour on how to pay for a Disney Vacation Club contract, but I know already that this show is going to be very valuable to a lot of people that kind of embark on this process. So, and as always, reach out if you have questions. Reach out to Amy over at Monera. Reach out to Derek if you're having questions, or any of the resale market agents throughout that process. They can help walk you through this a little bit more and help everything make sense in your situation. So I'll end by saying that was a wonderful way to present this topic. I think you did an amazing job.
I can't tell if he's being serious or not.
No, I thought it went very well. We only put Jeff to sleep twice, and that's pretty normal for one of these shows, So I think that's going to do it for this week's episode of the DVC show. We do hope you enjoyed it, and we will see you next Monday.